What's going on, everybody? Welcome back to the channel. My name is Mark and welcome back to Entrepreneurial Finance. Today I just want to take a look back at the year in review, look at all my stock picks, and objectively look back at the mistakes that we made. Self-reviewing or self-scouting is a huge part of investing in my opinion, and you need to do this every so often to correct your mistakes and really optimize your investment strategy moving forward. So what I did is I compiled a data table of my stock recommendations for the past 4 months, and I looked at two separate things. How well that investment did in the first month, and then how well that investment did till year end. The sample size or the time frame you're getting for each month is different because we're looking all the way till year end. This will be 4 months, 3 months, 2 months, and 1 month. So it is a little skewed, but let's just go ahead and jump into the data right away. Okay, so here's all the recommendations I made from the start of the year or from the start of my YouTube channel. And please take note of the recommendation date, okay? I made one stock pick video per month and they're sorted in chronological order. So one thing I want to stress before we jump into the numbers is that this is an extremely short time frame for investment. We only have 1 trimester worth of time in the market with these picks. The true test is really a year in advance or 5 years or even 10 in some cases. Okay, so we're looking at 4 months at the most here, which really isn't enough time to accurately decide whether this was a good pick or not. First, in the month of September, I advised or recommended TripAdvisor, Encana, and Norwegian Air Shuttle. And these were the first stock picks of my YouTube career, okay? So this contained my second best pick and my absolute worst pick. So Norwegian Air Shuttle has kind of gone through some turbulent times due to the MAX 737 fiasco, but ended up being actually one of my best picks of the year. So the reason they went through some turbulent times is because most of their fleet consisted of Boeing airplanes, and for any of you who have heard of the MAX 737 fiasco, they've been grounded due to them not being safe enough to fly. So obviously the stock took a massive hit when most of their fleet was grounded. But since I recommended the stock, it's actually appreciated almost 20% in 3 months. So TripAdvisor, on the other hand, did the exact opposite. Okay, in the first month, it actually did pretty well, up 4.34%, but since then, till year end, it's down almost 18%. So Google's kind of been eating their lunch for a while now. If you know, when you're looking to go on vacation, you obviously go on the internet, go on Google and type in whatever your destination is. So Google actually got into the travel business, and this is what has been really digging into TripAdvisor's margins. So down 18% on the year, but this one has been up 20%. So they kind of offset. Encana as well has also been through some turbulent times with what's going on in the Middle East right now. I don't know if some of you have heard in the last day or so, the Iranian general has actually been killed by US bomb strikes. So there's a lot of tension there right now. Encana, I recommended it at $5.82. Currently it's sitting at $6.32 at the time that I'm recording this video, which is a substantial gain, but it's too short of a time frame to tell, and there's still a lot to come for this company. They also re-headquartered, so they used to be headquartered in Calgary, Alberta, and they're actually moving to Colorado in the States. Okay, so that's it for September. So Norwegian Air Shuttle and Encana, 2 good picks. TripAdvisor, not so much. So 2 for 3, not bad. Okay, so for the month of October, we recommended Waste Management, McDonald's, and Gold. This was probably the worst month of my recommendations, as I kind of gave in to the recession fears and was extremely worried about the Fed and their intervention in the repo market. Even though this probably isn't a sustainable long-term solution, it's proven to keep the ball rolling all year. So the Fed has also promised not to move interest rates until at least next summer, which might bode well for all the money they've actually injected into the market. Okay, so you can see up on this table right away that Waste Management and McDonald's were in the red for both the 1-month percentage and the year-end percentage. Waste Management obviously didn't move too much, only down 2%, but McDonald's I did kind of recommend at an all-time high, which was a little bit stupid of me. I do still like that company as a long-term hold. They pay a decent dividend, and they're really in an advantageous position in terms of fast food. It just might have been somewhat overvalued in terms of its market share price. So Gold's an extremely pessimistic pick as well, but it's actually done not too bad. It really hasn't moved that much. In 1 month, it was up 1.5%, and since October till year end, it's actually up 2.05%. Gold is a commodity that has an inverse relationship with the market, meaning when the market's going up, gold is actually going down. We haven't seen that too much this year, as the market's been doing nothing but skyrocketing, and gold has kind of stayed steady. Okay, so Waste Management, McDonald's, both in the red, gold in the green, so 1 for 3 on that month. October definitely wasn't my best month, and I kind of gave into those recession fears a bit and recommended some extremely defensive picks, which didn't end up doing too well. So November was probably the most interesting month of all 4 here. I recommended 2 probably really unheard of companies in Tailored Brands and Livent. And they both actually did very well in the first month. So you can see Taylor Brands was up 14% in the first month, which is incredible, okay? But since then, it's actually down 10%, okay? So I recommend it at $4.64, and it's currently sitting at $4.14. Although it hit $5.29 at the end of November, right before December. Livent was definitely my best pick of the year. Livent is a lithium compound producing company, so basically they build batteries, or they help in constructing batteries. And in the first month, they were up 13.7%, and since November 1st till year end, they're actually up 24.64%. So 100% best pick of the year, Livent Lithium. I really wish I took a position in them. I did not. Okay, Boeing's kind of another interesting one, and it kind of ties into Norwegian Air Shuttle, right? Where you talked about the MAX 737 fiasco and how those planes have been grounded, and they're likely to be to continue to be grounded into 2020. So actually in the first month that I recommended it, it was up 7.73%, but since then it's down 4.16%, okay? So recommended at $339, and it's currently sitting at $325, but it did peak at $366. So there is a little bit of a pattern here, and I'm going to get into it on the next part of the video. But basically, my two best picks of the year were Livent and Norwegian Air Shuttle, which really are two companies that probably not a lot of you have heard of. My 3 or 4 worst picks were probably companies that you have heard of, okay? McDonald's, Waste Management, TripAdvisor, and Boeing. So to me, there's kind of a clear pattern here, and I just want to talk about that a little bit. All right, so here's a few takeaways. The summation of all my picks almost resulted in a 50% return. Now, this doesn't mean I would have made you 50% in 4 months. All this means is if you take a look at 1 month after all of my picks and sum that all together, it would total 48.08%. Now, the summation of my year-end percentage picks was much lower, okay? This was sitting at about 9.74%. So what this is telling me immediately is that my picks were much more beneficial in the short term than they were in the long term, or a couple months in advance. They did extremely well in that first month that I recommended them, but after that, not so much, for all of them at least. Now, a more realistic measurement would have been an equally weighted portfolio of all these picks, meaning if I have, 10 stocks up there, that you would have put 10% in each stock at the same time. Obviously, I recommended these stocks at different times. The summation of the equally weighted portfolio for only 1 month was 4.37%. If you look at the equally weighted portfolio till year end, it was actually only 0.89%. So again, what this is telling me is that my picks did extremely well in the first month, but it kind of came back down to earth if you held those stocks till year end, which is kind of telling me that swing trading might have been the best strategy for me. I'll talk about that next. But basically, my success rate, meaning I had a positive return for the 1 month period, was 77.78%. My success rate for the full year was actually only 44.48%. So even though these are some basic metrics, what this is telling me is the strategy that I should have used this year, especially with these picks, should have been swing trading. Now, like I said, this is still an extremely short time frame. The true test of success would have been measurement against some form of benchmark, like the S&P 500 or the TSX in Toronto, something along those lines, because if you actually look at the full year, 2019, the S&P 500 appreciated about 25%, I believe, so over the full year. So that's something that we might do moving forward in 2020. Okay, so just based on this data, I want to talk about what would have been the most optimal strategy for me, in my opinion, which is swing trading. Now, I've definitely been groomed to be more of a buy and hold guy, at school and stuff. All the, the older heads and, teachers tell you, oh, you should buy and hold until, retirement or something along those lines. Like I said earlier, if you look at all my picks, most of them did better in the first month than they did for the full year, with the exception of 2. And what that means is I should have essentially bought this stock at the start of the month and sold it at some point before the end of the month. So swing trading is a trading style that attempts to capture the gains of a stock over the period of a couple days to several weeks. And they primarily use technical analysis, okay? So I didn't per se use technical analysis when building my picks here. I used more fundamental analysis. As you know, I went through the annual reports on most of these picks, looked at the 10Ks and things like that. But that's basically what swing trading is. It's a short-term investment strategy, and it would have proven to be extremely beneficial with the stocks I recommended here. So this is just a snippet I took from Investopedia just to give you guys an idea of what swing trading is. So swing trading involves holding a position either long or short for more than one trading session. but usually not longer than several weeks or a couple months, okay? So you have an extremely short time frame to capture these gains, otherwise you liquidate your position and move on. So this is a general time frame, as some trades may last longer than a couple months, yet the trader still may consider to swing trades. The goal of swing trading is to capture a chunk of potential price move. Successful swing traders are only looking to capture a chunk of the expected price move and then move on to the next opportunity. Okay, so some very obvious pros and cons to this. I just want to quickly outline them. So the first pro is that it obviously requires much less time to trade. As I said, most people buy and hold until retirement, and yes, you're gonna make a substantial amount of money by doing that, by receiving dividends over time and just accumulating that compound growth potential. But what this does is it allows you to capture capital appreciation in a short time period and liquidate that position. And with all the platforms that offer zero commission trading, it's really never been a better time to do that. Okay, I would say the second pro is that these traders almost rely exclusively on technical analysis, which, omits the burden of fundamental analysis, going through and sifting through company 10K reports, which can be 500 pages for a given report, which is absolutely crazy. So it kind of simplifies trading a bit, but I wouldn't say it's as accurate as fundamental analysis. So they maximize the short-term market swings and they liquidate their positions. So you require less time to trade, you're simplifying the process by using technical analysis, and you capture market swings really without any fundamental analysis. Okay, so a couple of the cons: you're subject to weekend and overnight risk, meaning if you hold your position, for several days or several weeks, anything can happen in the world. Look what happened in the Middle East over the past week. The U.S. attacked the Iranese general, and there's been a huge uptick in oil swings. So if you had a short position in oil, you've lost a ton of money, okay? You're really subject to geopolitical risk and world events, which you cannot predict. There's no chance you can predict that stuff. Like I said, abrupt market reversals can result in substantial losses. These are events that you cannot predict. And what you're doing by swing trading is you're capturing the short-term gain, but a lot of the times you're missing out on the longer-term benefits, okay? So that compound growth through dividends, or you're capturing, unknown events which you wouldn't have been able to predict. One example I like to use is Disney and the acquisition of Marvel and Star Wars, okay? Let's say you're day trading Disney, which isn't really common to day trade blue chip stocks, but anyways, just for the sake of this example, and let's say you made 20% over the span of a couple weeks and you moved on to a new stock to trade. Well, over the long period of 5 years or 10 years, Bob Iger, the CEO of Disney, would have acquired Marvel and Star Wars, and the stock's been up, hundreds of percentiles since then, okay? So you're shortening your time frame and capturing gain in the short term, but you're missing out on the longer term benefits of investing. Okay, so that's all I have for today. I hope you guys enjoyed the 2019 year in review. I'm really looking forward to 2020 and what it has to bring. Looking forward to putting out more stock videos for you guys. And hope you guys enjoyed. If you did, don't forget to smash the like button, subscribe to the channel, and if you learned something, don't forget to share the video with a friend, okay? So as always, hope you guys enjoyed, and I'll see you guys in the next video. Peace out.